12. Okay, less than 12. And as we can see, the PE ratio a month back for Wells Fargo was trading at 9.6. All right, and even if we were to compare with the 5-year average, okay, on the right hand side, you can see that there's a 5-year over here. So the 5-year average is 12.44. So on average for the past 5 years, average is about PE 12.44. But right now the PE is actually at 9.6. So again, that shows that this company is undervalued at the current point of time. So of course, looking at a good company that is owned by Warren Buffett and valuation that is undervalued, naturally is going to be a buy for us. So the thing is, the other time I did share with you about this particular strategy, okay, on how you can actually buy even cheaper than the market price. Remember, the market price is trading at $27 over. So what we want to do is we want to buy even cheaper than $27. So how we can do that is basically by selling put. And let me just put it into the chat group for those of you who don't really understand. Yeah. So when you sell put, basically what it means is that you are actually writing a contract that promise to buy a particular share at the particular price that you want to buy. Okay. So in this particular scenario, I actually take out a piece of paper. I actually write down, okay, I, Neil Bowen, I promise to buy Wells Fargo at a price of $25, and I'm going to buy one contract which represent 100 share. So I want to buy 100 share of Wells Fargo at $25, and this contract is going to last all the way until 17 July 2020. So you can see that 17 July is actually pretty close. So it's about 2 more days before this paper will expire. So I think that is also the reason why we are actually doing this webinar today. Right, so the thing is, very interestingly, is in the option market, when you actually take this paper, when you go to the market, right, people actually willing to pay you money. Okay, that means you tell people that, hey, I want to buy at $25, and people are willing to pay you money, okay, to have this particular promise, right? So you can see there's actually 2 scenarios that is going to happen, after you actually sell this piece of paper. So the first scenario is that the price, okay, all the way until expiry date, which is 2 days later, the price stay above $25. So when that happened, okay, what happened is that you will collect the premium. So the other time I forgotten how much I collected, but I remember it should be somewhere in the range of about $100. How many of you actually remember how much money did we collect? Anyone remember how much premium we collected? If I never remember wrongly, it's around $100 lah. Okay, so basically, right, I write this piece of paper. I say I want to buy at $25. I go to the market. People actually pay me $100 in exchange for this particular promise. And so if let's say the price remains above $25, this $100 that I collected, I can actually keep it safely. And after that, 1 month later, that piece of paper will expire. It will disappear, right? But what happened if the price went below 25? Okay, if the price went below 25, okay, what happened is that, remember, I promised to buy the share at $25. So the other party with my piece of paper, okay, he will come to me and say, hey, Bowen, remember you have this particular promise. So right now the price, let's say, is $23. Remember you say you want to buy at $25, right? Okay, so yeah, right now I want you to buy. So when he comes to me with that paper, I have no choice, but I have to fulfill this obligation. And what I have to do, very simple. I just have to pay $25 for 100 share. And how much do I need to pay is 25 times 100, which is $2,500. Right. So remember this, if the price drop below $25, you need to come out $2,500 to own the share. All right. And if the price stay above $25, nothing happened. The $100, you keep it and it's totally safe. But you can see in these 2 particular scenario, whether is it I collect the $100 or even if I collect the stocks, to me it is a win-win. Because why? Even if I collect the stocks, I know that this is a good company. I know that if I hold it at $25 and in the long run, this company will recover. And by then, let's say it goes to $30, $40, I sell it away, I might even be able to make even more profit, right? But of course, I think for a lot of people, you just want to collect the premium and happily go and spend it lah. So that is why I think for today is really, really exciting. In fact, the price actually yesterday it dropped below 25. It was at about $23. Then it went up to about $24. But I just did a quick check. Okay, today when the market opened, the price actually go to about $25. Okay, which means that we are now in the safe zone. So for the next 2 days, if let's say the price remains above $25, then that's it lah. That piece of paper will just disappear. Then you happily collected $100 over. If the price suddenly drop below $25, can you tell me what do you have to do? What do you have to do if the price drop below $25? Yes, you have to pay $2,500 and you have to buy the stock. So now you would actually own 100 shares of Wells Fargo. All right, so remember, I mean, in the first place, we want to own the stock. We don't mind holding the stocks. So for me, actually very simple. Even if the price drop below 25 in the next 1 or 2 days, I'm actually totally fine. All right, but for some of you, if you just want to collect the premium, okay, if the price stay at 25, usually, nothing will happen. So it will expire worthless. Okay, it will expire worthless. So the piece of paper will just disappear. Okay, yeah, so that is exactly what happened last month. Okay, last month. And so right now, what I want to do is I want to show you my screen. Okay, wait. Yes, so you all should be able to see my trading platform. So actually, I just took a look at the stocks. As you can see, I still have my position, which I did together with you guys. So one contract. Yeah, so for me, I collected $107. So just now, I think, yeah, Jasmine collected more than me, 108. So yeah, $1 more more than me. Yeah, but anyway, yeah, you can see that yesterday, as of yesterday closing, the price was $24.25. Okay, now drop a little bit lah. But you can see the bid and ask already went up. So the market is not open yet, but even before the market open, there's this thing called pre-market trading. So people are already buying and selling pre-market lah. So you can see that the price has already went up, but although it went up, it's still below $25. But anyway, like I said, I just want to do this particular review to assure you guys that even if it stay below 25, don't have to worry too much. Unless you don't have 2005, then you need to worry. Okay, if you do not have 2005, in the first place, you shouldn't even have done this trade. So if you want to do this trade, minimum, you want to make sure that your account have at least 2,500 US dollar. All right. And even with this, right, you can see, even right now, the price is above. You can see that for my particular trade for Wells Fargo, I'm actually still making money, making some money lah, about 8%. Okay, but of course, today, once it go up, you should be able to see it should be jumping about 20-30%. Okay, somewhere around that range. Right. So, okay, let me share something new with you guys. Can we buy core Wells Fargo now? Okay, yeah. If you, let's say you believe that this is a company that you want to hold, and of course, I think you can actually buy it because I think right now the price is definitely still pretty reasonable. Okay, I think right now for Wells Fargo, the price is definitely reasonable. And I think yesterday, okay, they actually announced the earnings. And even though the earnings was pretty bad, it was actually worse than expected. But you can see that the price didn't actually went down much. It went down and subsequently it recovered. So that is where we know that, this at this particular price point of $25, it is actually very, very strong. Okay, the price point of $25 is very, very strong. So now I'm going to just take some quick questions, okay, with regards to the trade that we have actually done. Okay, so if you have any questions, okay, maybe I'll just answer some question first. So from Albert, if we own the stock, can you teach us covered option? Yes, I can teach you covered option, but the thing I just want to tell you is that it doesn't make sense for you to do covered option. I used to do it. Okay, but I can tell you that it doesn't make sense, especially in today's market. Okay, you do not want to do covered option. Okay. But of course, if you want, okay, I can actually do it in the community itself. And Kit Leong, what if the price 2H? What is 2H? Maybe Kit Leong, can you just share a little bit more? Okay, and Javier, any reason why you sell ITM put? Nope. Yep. Okay, very simple. When I actually sell it, it was not ITM, but now it is ITM because the price dropped lah. So that is the answer. Yeah, I actually sold a OTM put. Yeah, anyway, for those of you who don't understand ITM, OTM, okay, don't need to understand lah. This is a bit cheap. Kit Leong, okay, what if the price goes up to $30 by tomorrow? Can you pick up the stock? The answer is no. Okay, the answer is no. Okay, yeah, if it goes up to 30, even if it goes up to $40, right, the maximum you will earn is just the premium, which is $100. Okay, which is $100. So if you believe that this stock is going to go all the way up, what you can do is you can actually just go and buy the stock lah today. Can you pick up the stock? You can't actually go and pick up the stock because the person to determine it is the other party. And of course, for Lin, what if the price go up to 30? Do we just simply collect the premium? Yes. Okay, if the price goes above $25, whether is it 26, 30, 35, the thing will just expire. You don't have to do anything. Okay, that particular contract will just disappear. Because the money, remember, when you actually sell the put option, the money goes to your account immediately. That means you already collected the $107 and $108. But right now is whether do you need to vomit out that $100 back. Okay. Yeah, you already collected the $100. So now if the price drop, then you have to go and buy the share. But they cannot take back the $100. Whatever is yours, it is yours. What is your opinion of this stock in the long run, considering it hasn't been doing too well recently? I think recently, definitely bank stocks are highly affected. Even in Singapore, I'm actually quite surprised lah. I mean, I look at DBS and OCBC, they seems to be hiring even more people. But we can see that the impact of the COVID-19 definitely, okay, will affect the bank. Definitely will affect the bank lah. And on top of it, with the low interest rate, okay, low interest rate will also affect the margin of the bank business, because when the interest rate is high, bank actually can make more money because their margin is higher. But when the interest rate is so low, you know, the banks actually has a lower margin to actually charge for your mortgage, for your personal loan, for your all the loans. So yeah, in fact, you know, it's like with COVID, people are not paying their loan, and at the same time, interest rate is low. So it's actually not a good time for the bank lah. But of course, having said that, we can see that is the reason why the price of Wells Fargo has dropped so much. You know, from $40, $50, it dropped now to about $25. So all this could have already been factored in. So of course, we have to ask ourselves, do you think the banks will actually go even worse, will become even worse? Or when the COVID-19 ended, a few years down the road, the banks will recover and do well? So of course, we are expecting the banks will recover lah. So if the price at $25 on expiry, the premium collector is still yours. Yes, correct. As long as it is above 25, you'll be safe lah. In fact, sometimes even if it's like $24.90, yeah, it will still expire worthless. Slightly below 25 is still pretty safe. Right. Okay, so anyway, also, okay, anyway, keep the questions coming lah. Just to also update you guys that I have actually updated the spreadsheet for the Singapore stocks, and maybe I'll just run through your Singapore stock watch list. I'm not sure if you guys actually have watched it. Sorry, I just joined. How you calculate the premium? The premium is actually when you actually sell the put at that point of time, which is about a month ago. The premium is there. So of course, right now we can't really see because it is different. Yeah, when you sell the put, that is where you will be able to determine the premium. You can actually watch back our, I'm not sure if the last live trade is recorded. Yeah. Yeah, the market is open. Yeah, but I don't think the last live trade is recorded. Yeah, probably the next time I do another sell put, I will record it, and then you can actually see how we get the premium for Richard. Okay, let me just share a little bit on the Excel spreadsheet. Okay, so for those of you who have not yet okay, downloaded this particular spreadsheet, please do go and download, because this particular spreadsheet contains our 30 favorite company in Singapore, which comprises of the 30 STI stocks, okay, in our index lah. So I have also made some changes. For example, previously, okay, sorry, yeah, this is the wrong one. Okay, just give me a minute. I opened the wrong one. Okay, yes, this is the correct one. Okay, yes. So the one that is more fanciful is the updated one. So I have also updated in the Telegram chat. So when you download it, for those of you who have downloaded previously, if you want the latest one, you can re-download it again. You should be able to see the latest one. So the main difference over here is you can see that I have changed the SPH, Singapore Press Holding, to Mapletree Industrial Trust. Okay, because there was a shift. SPH actually got kicked out of the STI because they wasn't performing that well. And Mapletree Industrial Trust came in. All right, so I actually replaced it. And of course, things to take note is that for those that is in this brown color, they are all the REIT in Singapore, Singapore REIT. So the only thing to take note is that when you calculate dividend, okay, when you calculate dividend, you can see over here, we do calculate dividend. So for REIT, right, for most company, we want a minimum of 5%. As long as the company gives you more than 5%, it is good to enter. But for REIT, okay, we are a little bit stricter. So REIT minimum dividend yield is 7%. Okay, as a result, you can see for most of the REIT, okay, it doesn't fulfill the 7%. Okay, yeah, this one, although it is green, but it's actually a fail because it didn't fulfill the 7%. Same for all this. Okay, so far, I think price of the REIT is still relatively high. As a result, the dividend yield are all still quite high lah. Yeah, so all this is already updated based on today. You can see based on 15 July 2020. Okay, but what I will do is on a quarterly basis, okay, right now I think a lot of Singapore companies are releasing their earnings for the latest quarter, for the latest 3 months. So after most of the company release their earnings, I will also update the latest earnings per share, okay, because I think that will heavily affect quite a number of business lah. For example, I think for, let's say, Singapore Airlines, over here, you can see that Singapore Airlines is still making money. Earnings per share is still positive. But I would say based on the latest quarter, it should be pretty bad lah. It should be pretty bad. I think same goes for some of the other company as well. Okay, like Keppel Corp and all this. So I would actually go and update it again, probably in another 1 month. Okay, then we all can take a look. But anyway, y'all can feel free to go and change the figure. And please do your own due diligence, okay? Even though I have put in all this number, please do go and double check again. For example, certain companies that you're looking at, please just go and do a quick double check. And for those of you who are totally new, what are some of the things that you want to look out for a company? You can see it's all over here. Earnings per share, operating cash flow, debt to equity. Okay, so whether is it positive, or whether is it less than 50%. Then in terms of valuation, how do we know whether it is cheap or expensive? That is where we look at P ratio, price to book ratio, or dividend yield. Yeah, so everything is here. You all can just go and play around with it. If you have any questions, I think we have a Trello. We have a place for you to actually post your questions on Trello. So do go and use that particular feature, or actually you can ask me during this kind of live trade or Q&A session as well. And of course, again, for those of you who are not sure where to actually download, where to get this, okay, inside our Telegram, you can see that there's a pin post. Click on the pin post and you will be able to download it over here. Click here to download your special bonus. I think I've also uploaded it in the latest message. Okay, so just go and download it. Okay, let me just take back some question. Okay, so Joy, would you do another sell put now? Okay, yes, if let's say you want to, usually I will wait for it to expire lah. So that means after Friday, once it expire, maybe next week I would actually sell another put. I do not want to have two position, ongoing at the same time. Javier, do you feel bullish for WFC? If so, would doing synthetic call be better as we can cover the premium spent on the call with the premium earned from soap? Yeah. If you know how to do the synthetic call, you can do that. Okay, you can do that for Javier. Yeah, Kai, what is your view on purchasing long-dated call option for WFC instead of purchasing the actual stock? Yeah, of course, if you know how to do a long-dated call option, you can actually do that. So, but for those of you who are new, okay, who are not so familiar with the US option market, I think it's totally fine to just own the share. And of course, also depends on your budget lah. Okay, depends on your budget. So like right now, Wells Fargo is only like how much? $25. So technically, right, if you have $25, you can actually invest in one share of Wells Fargo. Okay, you can invest in one share. Oh, okay, did I see wrongly? Yeah, the thing went up to $25.40. Oh, yeah. See, Wells Fargo went up. So unfortunately, for those of you who want to collect the stock, sorry, man, no chance to collect the stock. Very likely it's going to expire worthless. So free money for you. Right, Sand. Can you help look at semiconductor chip company? Oh, yes, I think I actually did share on Ahmad before on our buy or buy series. Okay, and then I love semiconductor industry lah. Actually, y'all can take a look. Okay, this one don't anyhow tell other people. But you can see my current position. I have TSM, which is Taiwan Semiconductor, which is doing pretty well, 178%. And I have Ahmad, Applied Materials, also another semiconductor industry, not doing that well, but still okay, 16%. Then the rest is like bank. I have WFC, Morgan Stanley is also investment banking. Then of course Visa, okay, not doing that well, 4%. JP Morgan, 5%. Yeah, so far okay, so far so good. Everything seems to be doing quite okay. All right, how do you close the position? Okay, don't need to close the position. Like I said, if it stay above $25, that thing will just disappear. Okay, if the thing is below 25, again, the system will automatically do the transfer. You just need to make sure that you have $2,500 inside your account. They will do the transfer. You don't have to do anything. So that is why today I just want to explain to you, in case suddenly you see, hey, how come my account dropped to $2,005? I think it is good to take note. Henry, okay, I love this question. Is it a good time to buy DBS, UOB, or OCBC? Okay, yeah, coming back. So let me show you back my chart. Let's look at the first one, DBS. Okay, DBS. So we can see that right now the earnings per share is okay. Number one is make sure that this company is making money. So the bank is making money. Cash flow is healthy. Okay, for the banks, right, debt to equity tends to be higher because why? For most company, debt is a bad thing. But for a bank, right, a debt is a good thing because debt to a bank is an asset. The more debt they have means that they have more loans. So usually for banks, we don't even look at the debt to equity. Yeah, so I would say that fundamentally banks the DBS is pretty good. So if you look at banks, if you want to own it for dividend, okay, right now, based on the current price and the current dividend rate, DBS is giving a 5.8% dividend yield. So for me personally, I think that is pretty good. Okay, I'm not sure about you, but I'm sure that you all have money in DBS, POSB, and collecting 0.05% interest. So right now, you just need to transfer that money. Instead of putting in the bank, you get invest in the bank. That gives you that 0.05%. And they have no choice because now you're an investor and you are part of the company. So they have to pay you 5.8%. So this is how I get better interest. I don't put my money in the bank. I go and invest in the bank. I think at 5.8% is definitely pretty reasonable. And not to say, okay, once the thing is over, there is potential upside. So right now the price is $21. If it goes up to $25, $30, your money actually grow even faster on top of the 5.8% dividend. But at the same time, I think it is important that we have to understand that the market don't just go up. $21.90, can it go down to $15? The answer is yes, it is also possible. So always make sure that when you invest in companies, especially when it comes to investing, don't put all your money inside. Make sure that this is a money that you are willing to set aside for 3 to 5 years without looking at it. Okay, if you want to actually buy a property, if you want to buy a car or what, then don't go and buy share. But of course, people will say that now is not a good time to buy car and etc. etc. You should save money, But having said that, COE is pretty low so no right or wrong. Okay, but anyway, DBS I would say is definitely a good to go. UOB, same thing. We can see that everything is pretty similar to DBS. Dividend yield 5.3, slightly lower, but still above the 5% that I'm looking out for. So also a good to go. And of course, the last one, our favorite OCBC, everything is good. Everything is good. Same thing. The debt to equity is a bit higher, but for bank, it's okay. Dividend yield 5.7%. 5.7% for OCBC. So again, you can see decision, it is a pass. So I think Singapore really under the index, right? Really nothing much to see . The only thing I love to see is just the 3 bank . Unfortunately. Okay, unfortunately. Except recently I introduced Union Gas. Surprisingly, it's quite good. Okay, it's quite good. Yeah, so that's for Henry. Joy, at what strike price please for Wells Fargo? It really depends . If you want more premium, you can sell another put at $25. I think $25 is a pretty safe price to own Wells Fargo . Even if it drops, then get it at $25 . Yeah. How do you close? That one I answered already. Okay, Javier, what is your view on SMIC, the biggest semicon company in China? The thing is, I don't think you can invest in SMIC, right? Yeah, if I can't invest, I don't research on it . But anyway, from what I know, TSM is one of the largest. Of course, China is coming out with a lot of semiconductor company as well. But in terms of the technology, TSM has one of the best technology when it comes to semiconductor . And it's not easy to just replicate. Actually somebody did share with me on why China haven't been able to actually do as well in terms of semiconductor. TSM, it is a Taiwan company. Okay, it is one of the largest company in Taiwan. And why is it that Taiwan is able to do semiconductor so well? China is not able to catch up. Okay, this is what people tell me . I don't know whether true or not, right? But because they say that for the semiconductor industry, every chip is very expensive. It can be a few $100,000, it can be million. So, and everything is very precise. That means you can't make mistake one. And one single mistake you make, maybe you will lose a few $100,000. So they say that China people, right, they are very engrossed to make money fast. So they very kanchong one. So when it comes to this kind of slowly do one, they can't do as well as Taiwan. Taiwan people is like Switzerland, they can do one watch, spend, I don't know, 2 weeks or 2 months to make one watch and sell you for 30K, 40K. I don't know about it. Maybe y'all can do more research. But anyway, based on the statistic, I think TSM is actually doing very well. And I love TSM. And I think Micron is also quite a good company to look at also in the semicon industry. Gary, okay, so is it being exercised if before expire? It will only get exercised if the price drop below 25. But right now, we are still safe because it went up above 25. So we have 2 more days. As long as 2 more days on Friday night, stay above 25, then y'all can sleep well. Go and take the $100 and buy me coffee. Yeah. Okay, Alan, do you think the current tech stock boom resemble a dot-com bubble? I don't think so. Okay, I don't think so. Reason being very simple. Okay, in year 2000 during the dot-com bubble, as long as you are an internet company, whether you are making money or not making money, the price is super high. Okay, the PE is like 50, 60, 18, 100. But right now, if you look at all of these tech companies like Apple, Facebook, Microsoft, Amazon, even Netflix, all these companies are real solid companies with profitable earnings, solid cash flow. So it's totally different. It's not a bubble. When you say a bubble, right, it means that there's nothing one. Okay, it's like US, the debt is like, they can just print a lot of money and the debt become bigger and bigger and bigger. One day it will burst. you know, but when you look at the tech company right now, they are solid company with good profit, good cash flow. Of course, yes, the PE is high, but the PE is high because people want to buy, people willing to pay 50 times, 60 times, you know, for it. So it's very different from a barber lah. That is my personal point of view. No more question already. Okay. Yeah. Okay. So I can move on. How about the very overvalued share like Square and Fastly? Okay, FSLY. I think it really depends lah, because I think for Square and Fastly, some of them, they are not profitable yet, but the revenue are growing very, very fast. And I think moving forward lah, you know, people are investing in it because they know that 3 years down the road, 5 years down the road, the moment they turn profitable, this is a company that is going to grow very, very fast. I mean, one good example we can see, okay, just to share with you all, is this company called Tesla. Anybody know the price of Tesla today? Can you just type in what is the price of Tesla? Yes, about 1,500. Do you know 1 year ago what is the price of Tesla? Okay, if you are not sure, let me just pull out the screen to share with all of you. Okay, I think this is definitely a very, very good case study to share with everyone about this company called Tesla. And of course, that would also explains why whether is it overvalued or some people still say that, you know, Tesla is a bubble, etc., etc. But if you understand the business, you understand that it is not a bubble. Okay, let me just share my screen. Just give me a moment. Okay, can you all see right now? Tesla is about $1,505. Let's look at Tesla 1 year ago. Oops, sorry. Okay lah. I can actually just pull back. Okay. Okay lah. Somewhere in 2020, January lah. We just talk about January. The price of Tesla was $426. Of course, if you go below that, okay lah, exactly 1 year ago, somewhere in July, it is about $200 over. So right now it's about 1,005. So within 1 year, this company exploded about 5 times. More than 5 times, about 7 times, 700%. And so why did it actually happen? Okay, why did it actually happen? Okay, let's take a look. So how do you know the financial of Tesla? Okay, you have to go to Tesla space Morningstar. Okay, by now you all should know Tesla space Morningstar. Let's take a look at this particular company and look at the financial of this company. Yeah, anyway, I have a friend, okay, a mentor. He's very good at analyzing Tesla. So if let's say there is a chance, if he's willing, I will get him to share with you all why is Tesla a good company. In fact, I think probably they will say that Tesla will go up to $5,000, $7,000. Okay, I'm not that future looking. 2,000 is good enough. Okay, but I think very importantly is, okay, you can see that, okay, the revenue lah. Of course, we know that this company is selling more and more car. Okay, wait, let me just, okay, yeah. Okay, we know that this company is selling more and more car. Okay, you can see the revenue is jumping like crazy. Okay, I think very importantly why there's a huge jump is because previously the TTM, that means the latest earnings for this company is actually profitable. That means people always say that, you know, this is a company that is not making money, it's just selling dreams, selling hope. But no, they're actually starting to become profitable. But of course, because of the COVID-19, okay, the first quarter was affected. But I think they are going to release the second quarter earnings soon as well. So that could also turn this number back to positive. So this is a company that starts to make money already. And when they start to make money, it's not just small amount, it is going to be a big amount. And I'm not sure if you actually see the news recently. Elon Musk actually overtook Warren Buffett to become the 6th richest man on earth. Okay, that is how crazy it is. That is how crazy it is. So Anyway, since I'm here, I just want to share with you guys about this particular website called Earnings Whisper. So this particular period right now is very exciting. A lot of investors are focusing a lot because why? Every quarter, okay, as a listed company, you need to announce your quarterly result. Okay, so this is the period we call it the earnings period. That means a lot of companies actually announcing their earnings. So you can see, for example, this is tomorrow. Okay, Bank of America, Johnson and Johnson, Domino Pizza, Abort, Taiwan Semiconductor, all these company, they are going to release their quarterly earnings. So which also means that when they release the earnings, there will definitely be more volatility in the market because okay, people assume that people estimate the expert, they estimate that Bank of America is going to make 0.28 earnings per share. But let's say the bank actually announced, oh, I actually make 0.5. So when a company, okay, actually exceed the analyst expectation, what happened to the share price? The share price will fly up. All right, the share price will fly up. But at the same time, okay, what happened if, let's say, when they release the earnings come out to be 0.1, or if, let's say, it become negative, lose money, well, then that is where you can see that the share price for that particular day will just drop significantly, right? So that is why some people actually avoid investing during earnings period, because the price can suddenly shoot up a lot. The price can also drop significantly, right? So that is something that is a little bit unknown. But what happened is that, right, okay, I actually found this good company through this particular website called Earnings Whisper. And what did I actually look out for? You can see over here, this is what I call growth, okay, which means the expected growth of this particular company during the earnings. So you can see most of them are negative. Okay, of course, because of the COVID-19, most companies are expected to have negative growth. But surprisingly, you can actually see that there's actually some companies that has positive growth. So can you imagine during COVID-19, where everything seems to be worse, right? This company is still making even more money. It is still growing, right? So an example is this company called American River, I don't know, bank share. All right, then there's also, for example, Taiwan Semiconductor. And of course, we have Domino's Pizza. Yeah. And I think the story of Domino's Pizza is really amazing. Okay, is that during COVID-19, they do extremely well because why? Everybody is stuck at home, but everybody still order pizza. And the business model for Domino's Pizza is delivery. So their sales actually exploded. And yeah, I think I took a look just now. You can see that this is the earnings per share of Domino's Pizza. It used to be like 1.4, 1.7, slowly increasing. But can you see recently it went all the way up to 9 and even 10. So it's like within 10 years, this company earnings went up almost 10 times, 1,000%. For a company to grow 1,000%, or rather 10 times in 10 years is pretty amazing. Yeah lah. So yeah, but having said that, people are, so is it a good time to buy Domino's Pizza? Okay, the problem is the price has also went up a lot lah. So you kind of have to predict. That means when the COVID-19, you have to start thinking, what are some of the companies that will benefit from it? So, and you actually start to invest early, you will be able to benefit from it. You can actually see the share price from the start of the COVID, somewhere in, I would say early this year. Okay, you can see from about 200 over dollars, it went up. Now it's about 400 over dollars. Yeah, so over 100 over percent, close to 100% within 6 months. So, yeah, pretty exciting. Yeah, okay, I think there's some questions over here. Correct, Chicken Genius. Well, you all follow Chicken Genius. Okay, let me see. Okay, let me just answer Lex question first. Which broker you use for US trade? I use TD Ameritrade. Let me just type in TD Ameritrade. Okay, there's another name for it. The software is called Think or Swim. And then Sri Ram, okay, can we check Morningstar last EP and compare with expected EP? And if it's high, that means stock price. Actually, not true, not true. Yeah. Okay, why is it a negative book value per share for Domino's? Okay, so book value per share. Okay, what is book value per share? Book value per share is like net worth lah. Okay, the net worth of the company. So when a company has negative net worth, right, that means the what? The liability is more than the asset. The liability is more than the asset. So why is it that for Domino's, they have actually more liability than asset? I think it's the way they actually expand their business. You know, so what happened is that this Domino's is also a bit like McDonald's. That means they are almost like they are like a half franchise. They're also like an asset company. So when they actually expand to a new place, right, they actually incur a lot of liability. Okay, they incur a lot of liability because every new place is all open up through loan. When you actually open up a new space, you know, you have to take loan and all that. So they expand aggressively. So their liability is super, super high. But in reality, you also understand that because they work like a franchise model, so sometimes the loan, right, is not incurred by their company, it's incurred by the franchisee. And whether the business do well or not, they just collect a franchise fee. Yeah. So I realized that not just for Domino's, even for McDonald's and all the fast food chain that grows aggressively, their book value is always negative lah. So it's just the way the business is, the accounting is being done. But it's totally fine one. Is TOS good for day trading? Depend on what information you need lah. Depend on what kind of infrastructure you need. But I would say that for day trading, I think the best is interactive broker lah. It is more for trader. Okay. These few days I noticed that I cannot trade because most of the stock now IV above 40. Is it very stringent and must follow criteria, cannot ban? You can ban lah, but just remember the risk is higher lah for Albert. Yeah. Okay. Okay, so now let me share with you what is this particular company that I want to share with you today. Yeah, so I actually found this company when I was searching through Earnings Whisper, and I found this company called WePro. Okay, WePro. So the first thing that caught my attention was, wow, this company is actually still doing well even during COVID-19. Then what happened next is I actually went to check out the company financial. Okay, I went to check out the company financial. Let me share with yours. Let me share with all of you the financial of this company. Okay, so this is an India-based company. So this is an India company, but they are also listed in the US. Okay, they are also listed in US. So that is why you can see that everything is in INR. I think it's Indian rupee. I believe so. Yep. So you can see, first of all, the revenue is growing. Okay, almost year on year. And the next thing what we want to look at is, of course, earnings per share. Okay, so y'all can see the earnings per share for this company is also growing every single year. Yeah. So the next thing is, okay, this company is good, it's making money, but what about the cash flow? So you want to check the cash flow, the free cash flow. That is where you can also see that, wow, everything is also good. It is positive. It is also growing. Next, we want to look at the efficiency. Remember, for our buy or buy, we also look at the ROE. ROE, we are looking at more than 15%. So you can see over here, it is 17%, which also fulfill our criteria. Right. So next up, we look at the debt. Does this company have very high debt or not? So we look at this thing called debt to equity. So the company has a 0.03, which is fantastic. Okay, we are looking at less than 0.5, but this is 0.03. That means almost no debt lah. I would say it's very, very, very low debt. So far everything has been good, right? And of course, the last one is our net margin, more than 10%, more than 10. You can see that right now, the latest one is 15.93. So again, this is a company that if you look at my buy or buy, is everything green in color. Yeah, so I think the last thing that we want to look at is valuation. Okay, because sometimes a good company can be overvalued. So how can we look for valuation? Under Morningstar, you'll be able to find valuation over here. Okay, so currently for the PE ratio for this company is actually 13.54. So if I actually use PE 12, right, it is slightly above, slightly overvalued lah in terms of PE ratio. You know, but one thing I also look at is the 5-year average. So which means that on average, what is the P ratio of this particular company? And you can see the average 5-year, the P ratio is at about 15.88. And right now it is actually at 13.54. That means it is actually trading at a P ratio that is slightly below average. That means slightly below value based on the average 5-year. And I think other than that, right, is that during COVID-19, this company is still profitable. And not only that, it is still growing. What happened after the COVID? I think that is something that really amazed me. And that is where I actually went to take a quick look at what does this company do. Okay, so very quickly, we can see that WePro is actually one of the world's largest IT services vendor, and they actually do a lot of IT outsourcing, business process outsourcing, and consulting, right? So I think this kind of explain why this business is actually doing well during COVID-19 is because during COVID-19, people are forced to go online. People are forced to, adapt, change their business from non-technology to IT-based to digital-based. And that is why I think for now, this company is really like a, high demand. Everybody is like, hey, I need to transform my business digitally. I think even in Singapore, we do see that there's a lot of all these digital transformation company that helps you turn your business from non-digital into digital. Yeah, in fact, today I met a marketer, they can help you to sell durian on Facebook. How do you actually use social media? How do you use, all these Facebook Live to actually sell your product? So same thing, this is in the IT industry. And I think moving forward after the COVID-19, this is going to be a rising trend. Businesses are forced to adapt to technology. And I think India, it is a huge market, when it comes to this area. It is growing, it is really huge. It could potentially be the next China. I think China has already made it there already, but India is very huge and it is growing at a very fast pace. And I think one of my students actually already look at this company beforehand. So he said, oh, actually, I've been looking at this company and actually quite familiar with this company in India as well. So they are actually a huge company in India, right? So yeah, this is the company which is WePro. So if we actually look at the software itself, let me go to Think or Swim. Let me go to Think or Swim. So can we actually use this for the platform? You can also. So how do you actually do that? You can type in WIT. Okay, WIT. Oh, today jumped 10%. Yeah, too late lah. Yesterday should have went in. But anyway, it's okay. Yeah, so you see, this is a good company lah. And actually, one of the reasons why I kind of introduced this is because I already went through the technical analysis. Okay, and this is a pretty good timing to enter. Yeah, probably Jackson, after you look at the technical analysis, you will kind of agree with me. Yeah. So anyway, yeah, although it's 10%, I still feel that this company has the potential to still grow even more lah. So I hope your lesson yesterday. Yeah. Yeah, don't worry about it. I think as this company continue to grow, $3, I think it will grow to $4, $5, $6. And as long as it is growing, naturally the share price will follow lah. So what you want to do is, if you want to own the share, very simple. You can just click on this one, 3.86. You can just buy the share. How much does it cost you? Yeah, technically it costs you $3.86. But please don't go and buy one share because the commission is $5. So you end up paying $8. So you can buy like, I don't know, 100 share, 50 share. For those of you who actually just started out, low capital, I think this is a company that you can just go in. And if let's say you want to sell option, let's take a look. If you want to sell an option, what you can do is go for the 1 month, 37 days. Let's see whether does it make sense or not. Okay, you can see it doesn't really make sense because why? There is no $3 plus. The next available one is $5. What does this mean? That means when I actually sell a put at $5, means that I promised to buy at $5. It's a bit stupid, right? The price is $3.80. Why would I want to pay additional, $1.20 to own it at $5? Yeah, so yeah, this company doesn't make sense for you to actually sell option. So if you love this company, if you think that there's a potential, you can please do your own due diligence. If you think this is good, all you can do is just go and buy the share directly. Okay, let's say I buy 100 share. Okay, how much is it going to be? 386, right? Okay, let me see. Yeah, $386. Yeah, so that is how much you need to pay. If you buy 100 share, $386. I hope y'all can see. Let me share my full screen. Y'all can see my screen. Yes. See the commission. If I buy 100 share of this particular company, okay, I will spend 381 plus $5 commission. So it's only $386 in total. Yeah, so probably later I would actually get some of this. Yeah, but basically, yeah, this is the company that I just want to share with y'all today. Y'all can please do your own due diligence. Probably I'll also do a buy or buy series on this that is a little bit more in depth. Today is just a quick check because I found this company yesterday and I didn't actually go in depth. But just by looking at the figure, we know that this is a solid company to begin with. Right, so right now I'm just going to take maybe about 1 or 2 more questions before we end this particular session. I hope it has been useful for all of you. Okay, would you buy a call on this? I don't think so. I will just buy the share. Anyway, it's only $3 Just buy the share. If the numbers are good, why is the share price so low? I think this is something very important. We please do not link the share price to whether the company is good or not. Okay, because share price is just a price. Okay, it is just a price. Let me give you a scenario. Okay, let me give you a scenario. So what happened is that, right? Okay, for example, Tesla, right now the price is $1,500. Okay, what they can do is they can actually do a share split. Okay, that means if you have 100 share of Tesla, they will give you another 200 share of Tesla. So because of this particular split, right, the share price from 1,005, it will divide by 3. So share price from 1,005 become $500. So if you compare 1,005, is it better than $500? Seems to be better, right? But actually for your side, it's actually the same. Because originally you have 100 share of 1,005. Right now you have 300 share of 500. So share price is just a price. Please don't, we don't want to link a high share price means that it is a good company. A low share price means that it is a lousy company. Even want to sell, no one buying. Buy share, yeah, buy share. How did you manage to find WePro? I think like what I mentioned just now, I went through the earnings whisper. I found this company because I was surprised that it is doing well despite the COVID-19. Yeah. And whether we can do sell put or buy call. Yeah. Again, this one I would recommend just to buy the share. Just to buy the share. Don't need to do the fanciful thing. Sometimes keep it simple. When you sell put, which expiry date should we choose? Usually I'll go for the 1 month one, close to 30 days. Okay, close to 30 days. Any minimum price for stock to screen? Not really no minimum price. I think this is really one of the cheapest company that I look at. $3. US is hard to find companies that is so low in price. Unless like what you say is the penny stock. But this is not a penny stock. It's actually quite a big company. Would you choose weekly one or monthly option? Usually I would choose the monthly option. So you don't have to look at it every week. Just do it once a month. Yeah. Got new. Okay. Yeah, new. But new is now like $10 already. Yeah. What is the target out price? Again, for me right now, I wouldn't have a target out price. As long as the business continue to grow, I will want to keep it. Yeah, unless right, suddenly you see this price shoot up to $10 for nothing. And then that is where I want to be a bit scared. Okay, when the price go up for nothing, you need to be scared. And when the price go down for nothing, you also need to be scared. But if the price just slowly grow, because the company is doing better, then I think there's no reason for me to sell. Especially with the rising trend in, I think in IT as well as India is a big market for this particular segment. I think they're moving into Brazil as well. So this company, they're moving into a lot of the developing country. So good prospect. What is your opinion about IVR? IVR. Okay, let me take a look at IVR. I haven't heard of this company. So IVR. Wow. Invesco Mortgage Capital, is it? Just to double check. Oh, okay. Interesting. Okay, let's take a look together. I think now all of you also become expert already. So yeah, basically what I do is what y'all should also do, which is go to Morningstar and check it out. Invesco Mortgage Capital. So first thing I do is at the bottom left, I look at the company. So this is a REIT that invests, finance, and manage the property. Okay. Asset manager for this is Invesco, subsidiary of Invesco Advisor. So this is a REIT lah. So when you're investing in a REIT, right, pretty much you should be expecting a dividend lah. Okay, but very interestingly is you can see that the dividend yield is about 2.49. And things to take note. Okay, let me just mute. I think one of you is a bit loud. Okay, things to take note is that for US, when you actually buy a dividend company, you actually get taxed 30%. Okay, you get taxed 30% when you collect dividend from US company. Yeah, so which means that even after you collect this 2.49, you still need to pay 30% tax. So let me just check out the financial of this. But just by looking at the dividend, I'm not that happy about it. Wow, okay. I saw something that is very scary. You see this? Okay, so first of all, when we want to look at the revenue, we want to make sure that this company is not only growing, we want to make sure that at least it is positive. But you can see that this particular company revenue is very jumpy. Okay, like make more money, then lose money, then make more, then lose, and things like that. So it's very cyclical. Then of course, if you look at the earnings per share, you can see it's also up and down. And recently it's like negative 9.01. Actually, when I see this already, you know that the rest is all fail. When you see a negative at the last one, basically the rest of the criteria is all fail. So pretty much don't have to see further. I hope you have not invested in this. Yeah, but anyway, although this is a lousy company, but yeah, maybe the share price will still go up. Yeah, but for me, no, definitely won't be a company that I will be looking out for. Okay, if you have more companies, right? Okay, then you put it into the Trello. I go and create the Q&A Trello, but nobody could put question inside. So put your question in Trello. If you want me to research on any company, put it on Trello so that I can do a buy series on it, which is even better, which is more in-depth rather than today. It's just roughly, very quickly looking at the numbers. All right, so okay, I will leave more companies for the next session. I cannot everything show hand today. If not, I nothing to share next time. Okay. So Joy, yes, please do keep the question. Microvision, we probably explore it the next time. How to have negative revenue? Good question. How to have negative revenue? Now that you mentioned, yeah, probably they pay people. They pay people more than people pay them. What is the Trello address? Okay, later I'll put in the Telegram. Okay. I will put the Telegram. It's a place for you to put question. So if you have question, you can put it there and then I'll answer them. Okay, DDoc also, Datadoc is also, I will share it next time. Okay. Okay. Yep. I think that's all for me tonight. I hope this is a good learning point for y'all. And yeah, I'm quite happy to see that, Wells Fargo is actually doing well tonight as well. Right, just to double check. Make sure I never see wrongly. Okay, still above 25. Okay, fantastic. Yeah, so should be safe lah. I would say it's pretty safe. For those of you who are holding the sell put, I think it will expire worthless lah. Anyway, the earnings is already over, so we shouldn't expect much fluctuation even if it drop, right, then just own it, just prepare 2,500 and collect the stock. Okay, so I think that's all from me. I hope you all